We have with us Prashant Kumar, the MD and CEO at Yes Bank, joining in. Prashant, hi, good afternoon. Good to have you on the show. Let's first talk about that sizable 15,000 crore rupee fundraise. What are the terms for investors? What's the lock-in period? What kind of interest are you now seeing on the fundraise?
So there is no lock-in period for this issue of 15,000 crores, and we are seeing huge interest from both institutional as well as from the retail investors.
Sure. Also wanted to understand, because, last time around, post-investment, the stock rallied and then you had private banks who were not supposed to sell also sold, and that was not supposed to be done. But given that this time around for the FPO, the price again is much lower than the current market price, how exactly, can one be assured that this won't happen again, wherein the investors are going to sell then?
No, I think if you see in the last round, the 75% of the banks were locked in for a period of 3 years. Okay, but three banks, they sold a part of it. But after I think that nobody has sold anything, and we believe people are not going to sell it.
Sure. Do you consider this as purely protection capital, or will it also sponsor growth?
So basically, it's a combination of both. So say creating a buffer as well as for the growth.
And based on your current rate of consumption, how long do you see this capital lasting?
So like what we have worked out, that it would take care of our at least 2 years growth requirement. And in addition to this, we are also having 250 basis point of capital, which is sitting in our deferred tax asset. And we have also not taken into account any recovery coming from our stress asset portfolio. So if the timing for all those things also happen during that time, so this capital would take care of our requirement even beyond 2 years.
What are the current asset quality trends at Yes Bank currently? Tell us how your NPAs are holding up.
So if you recall, I think during the third quarter results itself, not only we recognize all the problematic accounts as NPLs, and we also made a very massive provisioning of 74%. And not only on the loans, but also on the investment book also. And after that, it's a moratorium. So we are not seeing any change in that.
And what kind of provisioning then will you need to take over the rest of the year?
So I think if you see, as per the regulatory guidelines, you are required to make 10% provisions on all those loans which were overdue as on 29th Feb, and which would have otherwise slipped, but not for the moratorium. So that is the regulatory requirement. And what we are seeing, there is now, things are coming back to normalcy gradually. So going forward, we will see what would be the requirement. But from our loan book, we are quite optimistic, and we are not seeing any significant negative impact.
Right. Also, Prashant, wanted to understand what is the position in deposits so far, and have you been able to hold on to a fair proportion of your accounts?
So I think we have shared earlier also that we have been able to stabilize our deposit outflows by March end, and after that we are seeing a net incremental addition in our deposit.
Wanted to understand about the moratorium and what percentage of your book is actually availing of it, and how have the collections as well been?
What we are seeing, there is a collection, there is an improvement in the collection, which is happening now for, say, during the current month and also during the last month. And there would be some impact of the COVID, but it would not be across. It would be specific to some of the segments like hospitality. It could be real estate also, and the aviation. Barring those three things, I think other sectors have started coming back in a normal.
Okay, now where are you seeing green shoots? When it comes to lending, where would the focus be going forward? What about recoveries as well? What more can you tell us on that?
So recovery, like we are having a stress asset book of almost 50,000 crores. And we also have a provisioning of 74%, and large number of our loans are fully collateralized. So going forward, we are going to see recovery from across the sectors. That is one part. And like going forward, those recoveries would definitely help us in not only boosting our capital ratios further, but would also add to our profit lines.
Sure. What's your guidance as well on credit growth going forward for the industry as well as for Yes Bank?
So as of now, if you see, there is a muted credit growth across the industry because the economic activities during, say, March, April, and May, they were just at a standstill. But since June, there is a revival of economic activities across the sectors. So gradually, when the things would be back to the normalcy, there would be credit demand. But definitely during the current year, the credit demand would remain subdued.
Appreciate you taking the time out. Thanks so much for joining in and giving us a flavor of how things are shaping up financially as well as the fundraise.